I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again for a return visit, a guy who was wildly popular last time. He's been talking about how the Fed and the economy are sinking deeper and deeper into trouble. And hey, Shazam, after 1,000 points down on Friday and on Monday, he was right. And the market's bouncing up and down like a yo-yo on Tuesday. Peter Schiff, thanks for joining us today on USAWatchdog.com. Of course, you're the founder of Euro Pacific Capital and also Schiff Gold. Thanks for joining us today on USAWatchdog.com.
Oh, thanks, Greg. Always a pleasure to spend a little time with you.
Well, explain the bizarro world. On Friday we're down 500. On Monday we're down another 500 roughly, and then on Tuesday it's jumping up and down like a yo-yo. I was watching these people on this new cheddar, and they were talking. They were on the floor of the on the trading floor. And I said, "What? They don't trade stocks there anymore, y'all." I mean, they're doing it by computers, right? I mean, tell me what's going on with the crazy market and what you see, what has been going on, and what's going to be happening for the rest of this year and going into 2019.
Well, the crazy part was the market going up. What makes sense is that it's coming back down. But, the Fed was really playing a game of how many straws it could put on the camel's back before it breaks it. And each time they raised interest rates, it was another straw. And I postulated on one of my podcasts that the last rate hike that the Fed put through was the rate hike that would break the camel's back, the camel being the markets, the economy. And I think that's exactly what happened. And now that, the bubble's been pricked, I don't think there's anything the Fed can do to patch up the holes. The air's coming out. Even if they don't raise rates, tomorrow, which is the expectation, and even if tomorrow's rate hike is the last rate hike and that the Fed never raises again, I think it's too late. I think the bubble's going to deflate. I think another financial crisis is coming that will be larger than the one we had in 2008. And I think the ensuing recession will be larger than the recession that we now call the Great Recession. So this will be an even greater recession. Potentially rivaling or surpassing the Great Depression as far as the impact that it has on the lives of ordinary Americans.
The Fed, there was a story out last week about how they got this $4.1 trillion balance sheet now. Of course, you can't audit them, so you have to take their word for it. But they lost $66 billion. They've got $39 billion in capital. Wow, it looks like Insolvent if there was any other company. But you were in the pre-interview, you said, well, they're going to lose a lot more. Please explain, how is the Fed going to lose a lot more than the $66 billion on paper they just lost?
Well, I have been warning about these losses for years. In fact, one of the things that Congress did years ago is they passed a law that basically said any money the Federal Reserve loses is the responsibility of the U.S. taxpayer. So these are not the Fed's losses. The losses belong to taxpayers. We ultimately have to bail out the Fed. And you think, well, how are we going to bail out the Fed when they're the ones that print the money? Well, we can only do it with tax revenue. So if the government has to bail out the Fed, they either have to raise taxes on the American people or they have to slash spending so that they can bail out the Federal Reserve. But right now, the losses are just on paper. So they haven't been realized yet. And so right now, it doesn't cost anything. But the problem becomes when the Fed is forced to shrink its balance sheet in a more aggressive way in order to rein in inflation, which at some point is going to start to run out of control. And the only way the Fed can fight inflation is to withdraw the liquidity. It has to shrink its balance sheet. It has to take Federal Reserve notes out of circulation and destroy them. But how does it get the Federal Reserve notes out of circulation? It has to sell its assets in order to recall its liabilities. The Fed's assets are treasuries, mortgage-backed securities, and a lot of those debt instruments have long maturities. And the problem is, as the Fed raises interest rates, the value of those bonds plunges. So maybe the Federal Reserve paid face value, par, to buy the Treasury. But if interest rates go up and they can only sell the Treasury for 60 cents on the dollar, that is a huge loss to the Fed's balance sheet when it attempts to shrink its balance sheet and fight inflation. And that loss ultimately has to be made up by the U.S. taxpayer. But the other risk, of course, is if the taxpayer is not going to reimburse the Fed, then the Fed has no way to really shrink its balance sheet to fight inflation because the value of its assets have collapsed so much in price that its assets don't match its liabilities. In fact, right now, the Fed's liabilities exceed its assets because on paper, the assets have gone down. So the Fed right now is already insolvent, and the degree of insolvency is only going to increase as inflation and interest rates rise higher.
So you're telling me that the Fed's going to be stuck with taking these big losses and trying to shrink their balance sheet, or that a lot of people say, well, they just hold them to maturity. Well, what happens?
Yeah, but you can't do that if you're forced to fight inflation. Let's say inflation picks up, and even the way the government measures it, it's 5 or 6%, and now the Fed wants to fight that and prevent it from going to 10%. It's got to tighten up money supply. It's got to raise rates. It's got to shrink its balance sheet. It's got to take money out of circulation, and it can only do that it has to sell bonds in order to buy back the dollars or the Federal Reserve notes. But if interest rates have gone up, which they will go up if there's more inflation, then the Fed is not going to get enough money. See, if the Fed had more all short-term government debt, that wouldn't be a problem. But the Fed basically screwed itself with Operation Twist, and I was very critical of Operation Twist at the time, which is why I said they should have called it Operation Screw, because the Fed took their balance sheet and they lengthened the maturity, and so now they own all these 10-year, 20-year, 30-year bonds, and it makes it so much harder to shrink the balance sheet because doing so will trigger huge losses.
They've already had these big losses. Could we get into a situation where the Fed, I mean, technically they're insolvent, but they can print money, but could we get into a situation where the Fed just goes out of business?
Well, they won't go out of business, right? They can print money. But what that means is if they're insolvent, they can't fight inflation. So if the dollar starts to fall due to a lack of confidence and the interest rates really start to rise on long-term bonds and you see a flight from the dollar, they can't fight the inflation. Like, think back to Paul Volcker. There was a loss of confidence brewing in the dollar in the 1970s. The dollar lost better than 2/3 of its value. Gold had gone up from $35 an ounce to $850. And what did the Federal Reserve do? Well, they tightened up money supply, they jacked interest rates way up, and they were able to put a floor beneath the dollar and restore confidence. But an insolvent Fed has no ability to do that, which means the dollar has the risk of completely collapsing.
Could we get into a situation where, I'm just dreamscaping here now, I'm not trying to trip you up, I'm just trying to play this out. Could we get into a situation where, the government just says, you know what, we don't need the Fed anymore. We're going to go back to the Treasury dollar. We're going to back it by gold and go back to the Treasury dollar. Sorry, Fed, you made some bad investments. And could that happen?
Well, they're not going to do that. And first of all, you don't have to get rid of the Fed to go back on a gold standard. Because remember, when we first started the Fed, we were on a gold standard. Federal Reserve notes had to be backed 40% by gold. And all Federal Reserve notes were notes for gold. They were IOUs for gold. And so we were on a gold standard with the Fed. My fear is that if we eliminate the Fed, it's not to go back on a gold standard. It's just to cut out the middleman so the government can print money directly without having to go through the Fed, and which would take away any pretense of an independent central bank that might somehow impose some fiscal discipline on a fiscally profligate Congress. I mean, the minute you turn over the printing press to Congress or the White House, they're just going to keep on printing, because that's the real way to be Santa Claus, is promise something for nothing. You pay for the something that you promised for nothing by printing money. And most people don't recognize the cost, but there is a cost. It destroys the value of money. And inflation is the same thing as an income tax, as far as it transfers purchasing power from one person to another. So if we get rid of the supposed buffer between unlimited money printing, right, and the American economy by getting rid of the Fed, well, that will just be a step in the wrong direction. I mean, if we could abolish the Fed and not allow the government to simply do what the Fed was doing, if we can go back to the type of monetary system that existed prior to the Federal Reserve, where we just had a free market gold standard, which gave us the Industrial Revolution, which gave us the most prosperous time period in American history, the Gilded Age, which lifted the standard of living of millions and millions of Americans while absorbing millions of Americans coming with nothing from Europe, immigrants, showing up on our shores, all sorts of people moving from the farms to the cities without any welfare, without any food stamps, without any Social Security, without any labor laws or minimum wage or any of this stuff. Yet we built an economy that was the envy of the world. We built the highest standard of living the world had ever seen under a gold standard, where the government was an afterthought, where the government spending on all levels, state, federal, and local, was 5% of GDP. Americans were truly free back then because government was so small. It wasn't a factor in your lives. The government wasn't trying to micromanage your every decision. And so, yeah, if we can go back to sound money and a real gold standard, then we really could make America great again.
I want to just move across the pond because we're talking about America, but there's a lot of factors out there that have nothing to do with America, like Mario Draghi, who and the ECB, the European Central Bank, is going to stop buying bonds overseas. What do you suppose is going to happen when they completely stop liquefying the European market, which is home to Deutsche Bank, which has 40, trillion in derivatives, and I had William Black on who said it's a criminal enterprise. Why are we masquerading Deutsche? Why are we pretending Deutsche Bank is a real bank when it's really a criminal enterprise? Anyway, I was William K. Black, professor of economics and professor of law, expert in white collar crime at UMKC. But anyway, I digress. What happens when they stop printing money to buy bonds in Europe, or is that just a head fake? Are they just going to end up doing it anyway?
Well, I think they will ultimately end up doing it. I think the sounder judgments at the Bundesbank will ultimately guide policy and potentially prevent the euro from collapsing. But to the extent that the euro is shored up, that means the dollar is the one that's going to collapse. The one thing that America has had going for it recently is that other countries are screwed up too. And because people were worried about Japan or worried about Europe or worried about China, they sought refuge in the dollar. Even though they were jumping from the frying pan into the fire, they didn't really feel the heat. They didn't understand what they were doing. And so America has benefited from the fact that other countries are screwing up too. But people have not noticed that we have bigger problems. We have bigger fiscal and monetary problems, bigger structural problems than Japan and Europe. It's just that we have not been held accountable for them yet because of the reserve currency status of the dollar. That has bought us this extra time. But unfortunately, we didn't use that extra time well. We didn't use it to get our house in order. We simply allowed our bubbles to get bigger. And so we were digging ourselves into a much deeper hole. And so ultimately, when the world figures out the position that we're in and they flee the dollar, which they will, the next crisis is going to be not just a financial crisis, it is going to be a currency crisis, a US dollar crisis, which is going to be a lot worse. And unfortunately, from that crisis, there are no bailouts. Because in order to bail us out from the financial crisis, they sacrificed the dollar. They printed a bunch of money. Well, if we have a dollar crisis, you can't do that. If you have a dollar crisis, you have to shrink money supply. You have to defend your currency by raising interest rates. That means the stock market crashes. That means the bond market crashes. That means the real estate market crashes. That means a lot of people lose a lot of money. There's a lot of bankruptcies, a lot of defaults. And then the government itself has to come clean, and it has to tell people on Social Security, we can't pay you. It's got to tell people on Medicare, we can't pay. It's got to tell government retirees, we can't honor these pensions. In fact, they've got to tell holders of U.S. Treasuries, we can't repay. We can't pay the interest. We can't repay the principal, right? That's what's going to have to happen in a dollar crisis. Unless we don't do anything about the dollar crisis and just allow the dollar to go the way of the Reichsmark. If we just allow hyperinflation, which of course is the worst possible scenario, and hopefully we avoid that outcome, but it's certainly a possibility.
What should these people be? I have people I know very well that are on pensions that think, I got my pension, I'm cool, I got it, it'll never go away. What do you say to these people with pensions, with teachers or military or whatever it is, whatever pension you have? What is your prognosis for people on pensions, the bond market, that kind of thing, the people that have to get paid back?
Well, it's not good. They're not going to get paid. The money doesn't exist to pay them, at least not in terms of purchasing power that they expect. Look, we're broke, right? We have overpromised on every level. The federal government has overpromised, the states, the municipalities. No politicians wanted to raise taxes sufficient to fund their obligations, but they still wanted to make promises to get reelected, especially when they wanted the votes of government employees who were being promised all these benefits. So the benefits are not going to get paid. The only question is, how will the default occur? Will it be honestly, where the government simply say we're not going to pay and you don't get any money? Or will it be dishonestly, where you get paid your money, but your money doesn't buy you anything? But either way, the pensions are no good, and people's savings and people's annuities. I mean, Americans are going to be impoverished on a national scale. I mean, people who are right now comfortable, who are millionaires based on paper wealth that they have and pension that they expect and things like that, they're going to be impoverished too. I mean, if you're already impoverished, you don't have that much to lose. But if you've saved for a lifetime and you've built up some wealth, you got to do something, because you're going to lose that. I mean, it's going to be gone, and you're not going to live long enough to make it back, which is why I feel so strongly with what I'm doing with my clients at Euro Pacific Capital, is helping to preserve their futures, to protect their retirements by protecting the purchasing power of what they've worked a lifetime to save and accumulate. You've got to get money out of the U.S. dollar, out of U.S. bonds, out of U.S. stocks. You got to create portfolios, which is what I'm doing for my clients with my managed accounts, creating portfolios of dividend-paying stocks in countries that have much sounder economies, that have much sounder currencies, where the people are saving, where they have balanced budgets and trade surpluses, and also getting into some of the emerging economies, which I think are going to be so much better off after the dollar collapses, when they no longer have to subsidize American profligacy. Take advantage of how inexpensive gold is, silver, some of the mining stocks. I'm creating these portfolios for my clients. In fact, not only do I think I'm going to help people preserve their wealth, I think we're actually going to enhance our wealth. I think some of the assets that I'm buying are so mispriced based on the misunderstanding that exists right now about the U.S. economy and the future trajectory of Fed policy and the dollar, that it is a unique opportunity for people to really position themselves to not just come out of this thing unscathed personally, but actually profit as other people are suffering.
How mispriced do you think gold and silver are right now? I mean, that's two of your biggest ideas for.
Well, I think they're incredibly mispriced, because it really reflects the excess confidence that people have in central banks and in fiat currency, and they should have no confidence. I mean, but they do. But when they are surprised by reality, right, they are going to have to react quickly or act quickly to try to preserve what they have. And then everybody's going to try to rush into gold and silver at the same time. And of course, what happens? The price is going to go up dramatically. And so all that's going on now is a bunch of noise. And people keep saying, oh, Peter, you've been saying to buy gold that was at 1,900, and look, it's down to 1,200 and change. Yes, I know that. I started telling people to buy it, it was under 300. And the first leg up took it to 1,900. The next leg up was taking it to 5,000, 10,000 or higher. All this is a bunch of noise. And people need to accumulate it. And again, I don't tell people to put their entire net worth in the gold, have 5 or 10%. Most people have no money in gold, and those people are going to be very unfortunate. They're going to be very, upset that they didn't. But now's the time they should accumulate. But the rest of the money, just don't leave it in dollars, because you're going to lose. I mean, if you know someone's going to pick your pocket, don't just leave your pockets full of money ready to get picked. Protect it. Put it in a safe somewhere, which is what I'm doing by buying quality assets, mostly dividend-paying companies that pay good dividends in countries that aren't so completely screwed up. I mean, no country is perfect, right? No country is as good as America was in the 19th century. That kind of freedom doesn't exist anymore. But there are a number of countries that are closer to what America used to be than America is now. I mean, we have gone so far in the other direction. We have lost so much of our individual liberty and freedom. Our government has now grown so much that you can find other places that have more freedom and less government. And therefore, they're going to have more prosperity. They're going to have sounder currencies. Their people are going to see a rising standard of living relative to what Americans are going to experience. And so you need to hitch your start of those wagons. You need to get your money invested there. And that's what I'm doing. I'm finding the best companies in the best countries and building portfolios that I believe are going to withstand the very, very difficult economic and financial times that are right around the corner. I mean, we should have dealt with this problem 5 or 6 years ago. We didn't. We were able to kick the can down the road. But now it's a much bigger problem, and it's much more important that you protect yourself, because the losses, if you don't, are going to be that much more dramatic. But the gains, the profits, if you do, will also be more dramatic.
You've had, and I'm going to finish. I'm going to finish your interview with what you think for 2019, your layout for that. But the climate in Washington, and now we have the New York State Attorney General who came out and made an announcement. I couldn't believe this. The new Attorney General of New York said, "We're going to go after the Trump family." I mean, they said something like that. Just going to go after them. You have the Democrats who are basically going to have just one investigation after another. You have Ocasio-Cortez, who the DNC, Tom Perez, says that's the face of the Democratic Party, which is Marxism.
Oh yeah, look.
What is your prognosis here for the political climate? Is that going to be like throwing gas and already on a house that's already on fire?
Oh yeah, I mean, look, Trump is his own worst enemy, and basically his biggest problem, right? His biggest liability is going to be what he now thinks is his biggest asset. That is the U.S. economy. Because the U.S. economy is going into a massive recession. It'll probably start next year, but we will still be in it on Election Day in 2020. And so rather than making America great again, he's going to make the recession greater again. We're going to be right back in the same hole we were in 2008, only deeper. And so now the president is not going to be able to say, ignore all this other nonsense. I'm doing a great job because look how great the economy is. Look how great the stock market's. It's going to be a bear market in stocks. It's going to be a massive recession. Unemployment is going to skyrocket. But what's going to be so much more painful for the unemployed this time is that the cost of living is going to go up. It is going to be Jimmy Carter style stagflation, the misery index, only this time it's not going to be Ronald Reagan showing how miserable everybody is under Jimmy Carter. It's going to be some socialist talking about how miserable everybody is under Donald Trump, who unfortunately will be associated with capitalism, less government, tax cuts, deregulation. And so the socialists are going to coast into the White House in 2020. They're going to take the Senate to go with the House. They're going to build on their majorities in the House. And then when they come to power, they're going to have a mandate for change. And this time in the wrong direction, in the direction of socialism. They've got a whole shopping list of socialist nonsense, from universal basic income, from single-payer health care, to forgiving all the student loans, free college for everybody, national $15 minimum wage. And you think the budget deficits are big now? I mean, we're running $1.5–2 trillion a year deficits if you use the honest numbers, the amount at which the national debt is rising, not how much the government wants to pretend it's spending in its official budget, but look at what they're doing. When we get these socialists coming in, we could be looking at $3, $4, $5 trillion a year in deficit spending. Where's that money going to come from? There's only one source. They're going to have to create it out of thin air. They're going to have to print it, and you're going to be living in a banana republic.
A lot of this, I say this all the time. I mean, Trump walked into office with $20 trillion in the federal debt. And then we found out, and you don't have to comment on this, but the $21 trillion that's been talked about, Dr. Mark Skidmore, Huffington Post did a story, Washington Post did a story about the $21 additional trillion of missing money. This is Dr. Mark Skidmore at Michigan State University, a real guy. Of course, the Washington Post made it out like, oh, it'll all cancel each other out. Well, there's a lot more debt out there than the official $21 trillion. I think we can agree on that.
Well, first of all, stop saying 21 trillion. It's 21.9 now, so it's 22 trillion. That's where we are. We'll be there in January at 22 trillion. But we're accumulating all this debt when the economy is supposedly booming. Imagine the amount of debt we're going to accumulate when the economy is busting, and we're not going to have to imagine it. We're going to be living with it. But that 22 trillion represents the tip of a huge debt iceberg, because that is the money that the government has borrowed by issuing a bond, right? So that just measures all of the Treasury debt that is outstanding. But the U.S. government has a lot of obligations that it didn't fund with treasuries. It has obligations to pay pensions to retired government workers. It has obligations to pay Social Security benefits to retired Americans, to pay Medicare benefits, to pay Obamacare benefits. It has obligations to insure bank deposits, obligations to insure pensions, right? The U.S. government has guaranteed all sorts of things like student loans and mortgages, right? All the Fannie Mae and Freddie Mac. So if you look at all of the debts that the U.S. government has obligated Americans to pay, you're not talking about 20 trillion. You're talking about well in excess of 100 trillion. So if you actually look at how much the U.S. government has committed Americans to pay, either in borrowed money or government guarantees, right? We are massively insolvent. What we owe far exceeds the value of all the real estate, all the stocks, all the private businesses that exist in the United States. So as a people, as a society, we are broke, and so we've been able to survive based on going even deeper into debt. But just like a family can't live on debt forever, right? You can't just keep on borrowing money indefinitely. You're going to have a day of reckoning. The same thing applies to a nation. We can't do collectively what we each can't do individually. So our day of reckoning is coming, and it's coming soon. And the only thing we can do about it, we can't stop it. It's a done deal. It's going to happen. All you can do is save yourself and your family. Maybe try to save your friends. But it's hard to convince other people to do the right thing when they're trapped in the bubble. But if you understand the problem, don't just stand there, like a deer in a headlight. Do something about it. And that's, again, that's what I'm trying to help people do at my broker dealer, at my asset management company, is get the deer out of the headlights, right? Get to the side of the road and be safe. Get your money out of harm's way. Get it out of the dollar. Get it out of U.S. assets. And then preserve your wealth and then actually profit from this. And then we'll see what happens. Let's hope for the best politically. Maybe after 4 years of hell under a democratic socialist, when the economy is really, in a serious depression with a lot of inflation, maybe then the public will have a belly full of socialism and they'll be ready to puke it up and really embrace free market capitalism. Maybe we'll have another presidential candidate that won't just talk about making America great again, but will actually help America become great again, because it's not the leaders that are going to make America great. It's American people freed of government, unshackled from government. That's why America became great in the first place, because we had a tiny government. And because government was small, we built a huge economy because people were big. And so what we need to do is shrink government back down and get rid of all these agencies and departments and bureaucracies, get rid of all these entitlements that we have, and allow a new America to be reborn in the image of what we used to be, of free people, rugged individuals who are, working individually, but who, through the capitalist system and the beauty of the invisible hand, everybody is working to better themselves, but ends up bettering everybody else. And where we have private charity that is efficient and where the goal is to lift people out of poverty, not government programs which are designed to trap people in poverty indefinitely. Right? We want a real free market system. We can have that. And so let's hope for that, but let's not bet on that. Let's not stake our financial futures on that. The path of least resistance in a democracy, which unfortunately we've become, we're no longer the republic that the founders created for us, even though legally we're still a republic. Practically, we're a mobocracy, which is what the founding fathers feared. So in a mobocracy, the path of least resistance is socialism, is redistribution, it's inflation, it's regulation. And so we need to invest, we need to prepare for that. And, maybe we never learn our lesson, but either way, you've got to make sure that right now that you're prepared for that outcome, because that's where we're headed.
2019 prognosis, I think you probably just gave it, but on a thumbnail, what's up for 2019? Just give me your analysis or prediction.
What's up? Consumer prices, the price of gold. What's down is the dollar, bond market, probably the stock market as well. But, if they print enough money, they can make stock prices go up in nominal terms, but they won't be able to do that in real terms. I mean, if you measure stocks and the price of gold, stocks are going to go way down relative to the price of gold. So if you price the Dow in gold. But again, the real problem is going to be when this turns into a currency crisis. We probably won't have that in 2019. We probably won't even have that in 2020. But sometime in the next few years, whether it's 2021, 2022, it's going to become a dollar crisis. And that's when it really is going to get ugly. But between now and then, the dollar is going to lose a lot of value. The economy is going to get worse. But it's going to take some time before you have that crisis of confidence in the dollar where people finally give up on it and flee. We're going there. And, if I get surprised, it could happen sooner. It could happen sooner than later. That's why you have to be prepared. Just prepare as if it's going to happen tomorrow, and make sure your economic house is in order, because again, you never know when you're going to wake up and the dollar collapsed overnight while you were sleeping, because the dollar's fate really is not in our hands. It's in the hands of our creditors. It's in the hands of the Chinese. And, we've been, beating up the Chinese pretty bad. Talk about biting the hand that feeds you. People don't really understand the relationship that exists. But, we are in really a big danger of seeing the dollar's reserve currency status taken away from us. And with that will go our standard of living, our economy. I mean, we've built everything on that. and everything is going to crumble when we lose that privilege.
Well, I will say that the deep states tried their best with the Russia hoax, and the 25 people that left the FBI and DOJ been fired or dismissed or whatever. I mean, they made up a hoax. I mean, there's been best-selling books about it, the Russia hoax. I think Greg Jarrett. I mean, they've been trying to. I mean, it's not been all Donald Trump's fault. I mean, my God, they've been trying to knock him out of office, and he was duly elected. So I mean, he's had a big uphill battle. I mean, it's daunting.
I mean, what are they saying? Oh, that the Russians somehow they colluded to prevent Hillary Clinton from being president. I mean, if that's the case, they did us a favor.
Yeah.
I mean, anybody that helped prevent Hillary Clinton is a patriot from being a president. We don't want that criminal. The problem is Donald Trump had an opportunity to rise above politics and to do what was right for the country, and that's where he disappointed me, because as a candidate, he was great. He said a lot of the right things, but he didn't take advantage of the mandate he had. He didn't level with the American public and tell them just how bad it was. The minute he became elected, he started telling us everything was great. We used to have the worst economy in the world, and now we have the best economy in history, even though they're practically the same economy. All we have now is more debt. But so, he became everything he criticized once he was president. There's an old saying, Lord Acton, power corrupts. Fortunately, the president doesn't have absolute power, but he's been corrupted by the power he has, and he has became the very establishment that he criticized. Even though he tries to talk a little bit differently, he doesn't sound like your typical politician. He doesn't tweet like your typical politician, but that's how he's governing. He's governing like a politician. He's more concerned about trying to get reelected in 2020 than doing something that's good for the country long term, and not really thinking about posterity, just thinking about how he's perceived right now in the here and now. I was hoping that he wouldn't do that.
What happens if we have all these? I mean, I've actually heard them talk about these sealed indictments on Hannity. Sarah Carter brought it up. Other people brought it up. They're real. I have a lot of indictments for people. We did have a failed coup. What would happen if we do get these? Some movement on indictment. Brennan may go down. Clapper may get indicted for that. They had a failed coup. I mean, they had a.
The president has friends so long as he's politically popular in the Republican Party, but his popularity is going to fade as the economy's future dims and as the stock market goes down. So at some point, the president is going to run out of friends, and in fact, there's going to be people looking to scapegoat him. So he may not survive to run for re-election, but it's not like Pence is going to have a better chance of winning. I mean, if Trump's not on the ticket, the Republicans have no chance. I mean, even if he's on the ticket, I don't think they have a chance, because if I'm right on the economy, there's no way any incumbent is going to get reelected when, the economy is that bad. Nobody's going to vote for 4 more years of a rotten economy. They're going to vote for somebody who's promising them, a better deal. And, the Democrats are great at promising new deals, and they're going to outpromise the Republicans. But, we've run out of other people's money. That's the problem. We're broke. Socialism looked like it worked when Roosevelt did it or Lyndon Johnson did it, because we still had the wealth that was created by capitalism to squander. But we've squandered it all. And so we can't do it anymore. And so these promises of a liberal utopia with all kinds of things provided by the government, it won't even appear to work this time. It's going to blow up as soon as they try it, because of the financial position of the United States and because of the deindustrialization of the U.S. economy and the fact that we are completely dependent on imports for our economy to run.
Peter Schiff, Euro Pacific Capital. You see it right there over his left shoulder. Also, Schiff Gold, a stark appraisal of what's going on. There's a lot of fans of the president. I like the president. I think he's got a big, hard job to do. I don't know. But anyway, listen, I really appreciate you coming on and giving it to us the way you think. Giving it to us straight. Thank you very much for coming on, Peter Schiff, Euro Pacific Capital, also Schiff Gold. Thank you so much for joining us today on USAWatchdog.com.